It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back into another episode of the Real Estate Breakfast as we bring you the latest property news every morning. You can hear us on iHeartRadio, Spotify, Apple, or wherever you get your good podcasts from. Lots of podcasts to catch up on, and if you are a new listener, there are over 1,500 episodes, so there's a lot of Aussie property podcasts to listen to. This time of the year, it is always a great time to catch up. Hopefully you're getting some more relaxation today. Welcome into a Monday, the first Monday for 2026. It is the 5th of January, and coming up in just a moment, the summer series of real estate. We are back into the time tunnel coming next.
The Real Estate Podcast wishes you and your family a fantastic Christmas break and a happy new year ahead. You're listening to the Summer Series on the Real Estate Podcast.
Oh, without doubt, probably the biggest market mover for the past 6 to 9 months, really, we've seen here in the Greater Darwin market has been the influx of the buyer's agent. So well organised, investors ready to go, really swooping in on the most affordable capital city market of the country and capitalising on such a strong rental market. We've always had a pretty transient population here in Darwin, so they're tenants by nature. We have a big proportion of tenants versus owner-occupiers, and as you were talking before, with so many capital cities in the country now pushing through $1 million, the buyer's agents are extracting that equity and then they're coming north and looking for the bargains. So I've had big activity in the Queensland and Western Australian markets through the buyer's agencies, and now they've come to the top of the country to look for the next hotspot.
You know, about a month ago, I was talking to somebody who was telling me a story about the buyer's agent gurus that exist because they've got their own following. People follow them, and some of them have got thousands and thousands of followers. This point in case, buyer's agents, they move into Darwin, they're going to influence those investors that follow their lead.
Oh, without doubt, this is a really interesting way that the market moves with these larger buyers agencies. National groups, we're of one buyers agency that have bought over 250 dwellings in Darwin in the last 6 months. It's a real shift in the investment market. If you think 10 or 15 years ago, these investment groups would quite often target one particular development, a high rise, off the plan, swoop in, buy the whole building and then package it up to investors. What we're seeing now with these buyers agents, you've got hundreds of organised investors. They're well structured with trusts and other investment vehicles, and they're going and buying single dwellings or single strata units and really mixing their whole way through the local market. It's very organised and quite strategic, and they're moving quickly and having really strong results and getting properties bought for their clients.
Yeah, that peak, that rise can be quite large in terms of when it starts to take off. It really takes off. So let's just have a look at the Darwin housing market. As you say, it's experiencing notable growth. The median dwelling prices climbed to $531,000, marking a 4.1 annual increase. Houses have led the surge, 5.1% rise over the past year, reaching that median of 602,000. I mean, that 5.1% rise, that's pretty good, over the last 12 months?
Yeah, it certainly is. We've been in a pretty tough market cycle for quite a period of time now. So we're now seeing this the median prices increase, and when you overlay that with the amount of listings that are on the market, the data is really quite obvious. So the Greater Darwin market, the number of listings on market as of the last week of April was 34% lower than the same time last year, and that's a really large reduction in the number of properties that are available for sale. In the Palmerston market, which is really strong for the investor market, it's a satellite city of Darwin. That market has 50% listings from the same time last year. So this urgency that the buyers agents have put in, we're seeing less properties on the market, and we're now starting to see the median house prices and properties increase in value because of a lack of stock and a lack of supply.
Yeah, that's right. So a lot of what we saw in the lead up to the federal election were these proposals increasing demand from first home buyers. whether it was increasing access to the home guarantee, the 5% deposit guarantee that the Labor government has in place, or the Coalition's proposal to deduct interest off of taxable income. Either set of policies we believed would have a certain inflationary pressure on values at the lower end of the market. Now that the Labor government has been successful and not only has another term, but has another term with a very strong majority in the House of Representatives, it's likely that that expansion to the home guarantee is going to go through. They have proposed 100,000 dwellings constructed for first home buyers, which will help satisfy some of the additional demand. But at the end of the day, if you're continuing to fuel demand without relieving some of the challenges in the construction industry, it's very likely that this will lead to upward pressure in prices.
Yeah, and despite the fear, we should talk about this as well, despite the fear surrounding declining property values, the data paints a more reassuring picture for the majority of Australian homeowners. Your recent analysis shows, in fact, that even with a hypothetical 10% drop in national home prices, nearly 89% of sellers would still make a profit and median gains would remain substantial.
That's right. So the reason I looked at this was because as we went through the election campaign, both Claire O'Neill and Michael Sukkar were asked whether they would actually want to see housing values go down, because that's got to be ultimately the answer to more affordable homes. Both said they would prefer to see prices continue to rise, albeit less than incomes. And the concern that was raised was negative equity. Now, negative equity just isn't that big a concern for most homeowners in Australia. About 1% of homeowners are in negative equity, which is where the value of your outstanding mortgage is more than the value of the property. In part, that's because of strong price rises. But the RBA estimates that even if property prices went down by 30% tomorrow, still about 90% of mortgage holders would still be in a positive equity position. And then if you want to take the argument further and say, okay, even if you're in negative equity, that only really becomes a danger if you fall behind on your mortgage payments and you need to sell your home. In reality, most owner-occupied mortgage holders are 2 years, or sorry, not most, but 40% are 2 years ahead of their mortgage payments. The arrears rate, so the mortgage arrears rate is only 1%. And then on top of that, even if we did reduce prices by 10%, as you say, there's still a lot of profitability in the Australian housing market. 90% of home sellers would have made a profit if they'd sold for 10% less at the end of last year. And the median profit from resale would have been $260,000. So any way you look at it, I think it's fair to say that Australians can afford at least a modest reduction in their home values from where they are now.
Yeah, no, that's really interesting. Interesting stuff. Now, April housing data. We should take a look at this. How did it all shake out for you?
Well, contrary to the article where I said housing prices could go down, they didn't. Surprise, surprise. Australian home values were up another 0.3% in the month of April nationally. Now, home values were fading a little bit at the end of last year because of things like cost of living pressures, high interest rates. But ultimately, the February rate cut saw housing values rising again from February, up 0.4% in March. And so the growth rate has eased a little, 0.3% in April. But what was pretty remarkable about that month is that each of the capital cities experienced a growth in housing values on a quarterly basis. So it's a very broad-based benefit that has been seen in housing values from the February rate cut.
Grab your weekly dose of inspiration to help build a real estate portfolio. We talk to the best in the business every day. Learn from the professionals and know your property with us.
Victoria, experts have been forecasting a 10 to 13% property price increase on the Gold Coast for this year. You're probably seeing that in terms of the numbers that you're talking with.
Yes, that's right. We're still finding that there's also an increased interest in new builds, which of course creates a bit of a spike in prices. There's still limited land available on the Gold Coast, and some of those buyers, whether they be international, interstate, or even local, looking to change through different suburbs, if they're looking for that central in the heart of the Gold Coast around Surfers Paradise, Isle of Capri, Paradise Waters, Mermaid Waters has become very trendy, of course, as well. There really is not too much available available in the brand new builds. So that's sort of creating a high demand in those areas. Also, we look at FIOB and the fact that that will drive the prices up as well.
So the international buyers, they really are, aren't they, lining up for these waterfront showstoppers. The developers are onto it. They know that they want everything included in these luxury waterfront showstoppers. You're getting them from around Australia. Where else are they coming in from internationally, your buyer inquiry pool?
We're still getting interest from overseas UK, people coming back, Switzerland, Italy, Spain, also Vietnam, Thailand, we've had buyers from, and China, of course. So still quite a wide variety of buyers coming through internationally. Of course, we drag in that lifestyle that has the move-in ready, close to the shops, the beach, and really good schools on the Gold Coast. So it really is very attractive to people coming from all around the world. They see it advertised and they think, well, that's where I want to raise my family.
Thank you, Craig. Yes, it's keeping us busy, and we're off to the Cannes Film Festival next week to promote our latest movie, by the way.
Oh, yes, it is that time of the year for Cannes. Lucky you, I've done that 4 times, and you just never get sick of going into the south of France. For those that don't know, there's 2 things that happen in Cannes. You've got the film market, where about 30,000 people from around the world, film industry people, are buying and selling product. Then you've got the red carpet stuff, which Brad Pitt, etc. are at. 2 very different things. Which one are you going to? I think I know the answer.
We're actually going to both. We've been invited to the markets to pitch. We've actually got 3 products we're looking to pitch, including our zombie plane, which is being finalised right now. And we've got a fun one called Nuns with Guns coming up, which is a series we're talking to Amazon on. And we've got another one, which is a zombie movie again. We've also got the invitations to a couple of red carpet events because we've been rubbing shoulders with the who's who behind the scenes. So Victoria has been out spending big on new dresses and new shoes I spotted this morning also.
Very good eye you have, yeah.
All right. Well, good luck with the new dress, the shoes. It seems like that is the perfect time to get out of this conversation. Nuns with guns.
Perfect.
Thanks, Craig. Great to talk to you.
There appears to be a bit of a trend in some circles of mortgage broking, and there's some new courses that have been released that are targeting mortgage brokers and teaching them how to become a buyer's agent. And to be honest, I think, yes, it is a huge conflict of interest. And even when you're reading the marketing guff around these courses, they refer to things such as increase revenue and save you from losing revenue, i.e. they're seeing it as a bit of a money grab. But you've got to understand where brokers get their money from. They get their money from selling money, right? They sell money and banks give them a commission for doing so. So if they can help you buy more money from those banks, they're going to be making more money. And so you can just see how there could be definitely a conflict of interest here.
Yes, now talking of regulators, I want to change tack here. A top-performing real estate office in Sydney is currently under investigation by New South Wales Fair Trading Act following a compliance crackdown on underquoting. Now, the agency, which has gained attention for its high-volume sales and industry recognition, is being scrutinised by the Strata and Property Services Task Force. Underquoting is a serious offence in New South Wales with significant fines in place for breaches, although I guess it can be argued whether those fines are significant.
Yeah, well, underquoting has been against the law for a number of years. In fact, back to 2016 is the last change to the laws. It's illegal in many states and territories across the country. Victoria in particular has had some very high-profile cases where they have had issued fines in the hundreds of thousands of dollars. I think from memory there was one as high as $750,000. In fact, I did interview the fellow that got that fine some years back on the Elephant in the Room podcast. So the Office of Fair Trading in New South Wales, they would like a high-profile scalp, because once you start coming out and saying, look, these are significant penalties for breaking the law in this way, then they're hoping that there'll be a bit of a trickle down, I guess, effect with the rest of the market to start taking these laws seriously. The actual fine, the maximum fine if it goes to court in New South Wales currently for underquoting is only $22,000. And I tell you what, if you're raking in millions of dollars in commissions every year, that's just that's chump change. That's just a cost of doing business. It'll be interesting because in Victoria, they use the ACCC. They use consumer protection legislation, not the actual fair trading legislation or consumer affairs legislation. So I wonder whether that's going to be a similar thing here in New South Wales. And I think too that the Office of Fair Trading wouldn't necessarily go public with this investigation unless they're sure they've got a case. So it will be interesting to see this unfold and whether or not they will enact that different legislation in order to be able to impose larger fines.
Yeah, because as you say, the underquoting of real estate has been illegal in New South Wales since 2016, and these changes, they were aimed at stopping agents from misleading buyers about property price expectations. It's a bit of a grey area, this one. And just sort of circling back to the fines, for 2023 financial year and 2024, there were 379 inspections carried out, uncovering 148 breaches. Now, how much did that sort of rake in? Well, because of the fine threshold, they issued over $143,000. So part of the problem might be that they, as well as, if you're right, if they're going after a scalp, they might have to increase the penalty here.
Well, and that's got to be legislated, which is, that's part of their problems. But also those fines, on the spot fines, are I think they're $2,200 from memory. They're a small amount. So the $22,000 maximum fine, that's only if it goes to court and the OFT wins. So, it's a lot easier to just slap a fine without needing to put together all the resources to go to court. I definitely know that $2,200 fine is definitely seen as a cost of doing business with many agents. Anecdotally, I've heard that being said and many, many times over the years. And so it's just a slap on the wrist. I don't really care too much. It is a complicated issue, though, because the legislation is very clear in its instruction, but there are interpretations, shall we say. And I tell you what, that agents do love to look for interpretations so they can get around it. But the issue is you've got a conflict here. In some markets, if you don't underquote, you are not actually fulfilling your fiduciary obligation to your vendor to get the best possible price. And that is because other agents are underquoting. So it's a very difficult and sticky position for agents to be in. But I think this is why the Office of Fair Trading would want to go for a leading agent, because they be the ones who be setting the tone in a marketplace. If you're just a smaller boutique agent and you want to do the right thing, you have good ethics and you really want to be trusted and you come at it from a position of fairness and honesty and all that sort of stuff, you're disadvantaged because vendors are inclined to go with agents that sort of get the results. And in order to get the results, we'll take properties to market and underquote.
We connect you to the best real estate information across Australia. The Real Estate Podcast.